Welcome to Technical Tuesdays. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing seasonal patterns. But before we do, you know the drill. Make sure to like and subscribe so that you could get future content just like this. So what are seasonal patterns and how do they relate to financial trading? So seasonal patterns are things that happen throughout the year. Okay, there is winter, summer, spring, autumn. Not in that particular order, right? There's all the seasons that come up during the year, and because of that, we as the human race consume certain commodities specifically during different times of the year. Those are the first things that come to mind. So, for example, oil in the northern hemisphere is mostly consumed during the winter time of the northern hemisphere, less so in the winter time of the southern hemisphere, right? Because it's warmer in the southern hemisphere. And if 90% of the population in the world lives on the northern side of the hemisphere, and during the winter you consume it the most, then generally speaking, any kind of energy kind of prices, either natural gas or regular oil or sweet crude oil, any of those will generally go higher during the winter months because that is generally speaking when they're going to be consumed. So October, November is the beginning. They're usually spiking there, and then there's a little bit of a teeter on if it's a warmer winter, and then it fluctuates from there. Okay, and there are seasonal commodity prices that go through patterns, and this is not something that happens once or twice, but over the years you see them. And some of the most famous ones are the consumer ones, right? The ones that we consume the most, soybean specifically, or corn or wheat. Generally speaking, they generally rally towards the end of August, beginning September-ish time, okay? And that is a seasonal pattern. The US dollar, for example, generally bottoms out in January, okay? So that's an important element. That's coming up right now. So that's another form of seasonal patterns, and they happen all the time because basically we as the human race consume things all together, whether we're talking about commodities, whether we're talking about money, okay? We consume things as a community, okay? And that is patterns that we set ourselves up because we're consuming people, right? Another example, just one more, is in September. Generally speaking, in the Gulf of Mexico, where most of the U.S. oil is refined, okay, during the Gulf of Mexico through Texas, there are many hurricanes that start coming into Florida and affect that entire region. And because of that, that fluctuates the oil reserve in the United States, okay, and it does affect it quite tremendously, okay. If anybody's ever heard Hurricane Katrina completely lopsided the entire oil industry because of that. Check it out, Google it, you'll see what I'm talking about, all right. So that generally happens in October, September-ish time. Those are the times where hurricanes in that part of the world is most common, and these things happen all the time. I mean, I'm not going to mention every single seasonal pattern there is, but check it out, Google it, and you'll see that there are tremendous opportunities just by trading the seasonal patterns. Thank you for joining us for Technical Tuesdays. We'll see you here next week. God bless everybody. Have a great week. Thank you.